welcome back to the Don and Gino Real Estate and Finance Show right here on your hometown station, AM 1220 KHTS.
And remember, our goal is always to guide you to personal and financial wellness.
Well, happy Saturday and welcome back to the Don and Gino Real Estate and Finance Show right here on your hometown station, AM and FM. That's right. We just became twice as good. I know I use that line, but we are twice as good. Now we're on AM and FM. That's kind of cool.
We're always good because we have great guests, and today's no exception. But we are on FM now, so please check us out at FM 98.1. Maybe get a little better reception.
There you go. And also you can join us right here in our custom-built studios at Skyline Home Loans. We're now in the Sunkist building right by Magic Mountain. You can probably hear the screams in the background. And you can basically go to donandgino.com, click on the live streaming button, and we'll allow you enter the studio where you see our very handsome, very knowledgeable, and backed by popular demand, Mr. Carlos Villalobos with Carlos Villalobos Insurance.
Thank you very much for having me. It's always nice to see both of you.
All right, likewise. It's always a pleasure because every time you come in here, you come in with something new, and you walked in today. And
how's that possible after like 24 times you've been in here and we still come up with new stuff? Oh, because there isn't just one kind of insurance?
It's a challenge. No. There's a lot to talk about insurance. I mean, even people that think they know insurance, there's so many things that you have to insure, get covered, and it's always fun. It's always fun to be here.
Yeah, but you always educate us. Every time you come in here, I think, we've listened to, you hear, like you said, a couple dozen times. I think we got to pick, nope. Today you brought more stuff for us to learn about, and always stuff I'm like, shoot, glad I know about that. I didn't know that.
Yeah, the job of an insurance agent is to educate people and to let them know what's available. And then the person needs to make their own decision if that's a coverage that they want and want to pay for it.
Right. So, I mean, I'll give you another, and I know this is kind of going off topic, but I was looking at Aflac today, right?
Aflac.
Yeah, and one of the things I was like, well, that's $100 a month, and I thought to myself, what are the chances, right? This is how actuaries work, right? What are the chances that that's actually going to happen to me? And I said, okay, if I put $100 a month in a separate savings account, as long as nothing happens to me in the next 5 years, I come out winning. So, sometimes you have to make those decisions. So I was like, nah, that's not going to happen to me in the next 5 years. I'm not going to get it.
Well, that's the problem with insurance here. That's like saying I'm not going to get in a car accident. I'm not going to there's never going to be an earthquake.
Well, so you've got to evaluate the likelihood, right? You have to, I didn't have earthquake insurance for I don't know, 10 years on my properties. I winged it. And then one day I woke up in the morning, I said, it's starting to feel like it might be coming someday soon. Time to get it.
Okay. But what about your mental space? Your mental space. I know that because I have, thanks to you, Carlos, you figured out how to help me get insurance on my property, earthquake insurance. I feel good every year. When you hear the little rumble here or there, I'm not as panicked as, oh shit, I don't have earthquake insurance.
Right, because there are options in earthquake that you don't have to get full value. You can get 50% value of what you have.
And we talked about that over a year ago, and I think that's what really revolutionized the options for people.
Exactly.
They haven't, and for those of you that haven't evaluated that opportunity, take a look at earthquake insurance. It's not as bad as it used to be.
No, there's a lot of options. You can go in with the insurance carrier, and they'll pay 80% of the claim. You pay 20%. There's a lot of options out there, and there's more than one carrier, so that's making it even better because there's more competition. Whereas before it was very limited to where you can go get earthquake insurance.
Competition's a good thing.
And a good example talking about insurance, what you need or don't need is somebody that just pays off their auto. We see this all the time. They have comp and collision because the lien holder or the leasing company forces them to have it. Because if they don't get it, they're going to give it to you. They're going to give it to you, right?
One way or another.
And we see this all the time.
They'll give it to you.
They pay off their loan, and the first thing they do is they call us. We want to cancel comp and collision. And we go, this is your money now. Are you sure you want to do this?
Right.
Because,
there's a reason that your financee wanted you to keep that insurance.
So that a lot of times they cancel immediately coverages that are forced on them. And that's really when they need it because now we're talking about their money.
Now maybe it's not a bad time to reevaluate.
Right.
Make sure that you have the right coverages.
Exactly.
It's a trigger moment to reevaluate, but it doesn't mean you should just get rid of it.
Correct, because if you're going down the road, somebody hits you, your car's totaled, they don't have insurance all of a sudden, now who's going to pay for your damage?
Nothing.
Right? So if you
what if you get hurt and they don't have insurance?
True.
Because uninsured motor is a big thing too.
Right. A lot of people are doing without that. They're trying to cut costs to save a little bit of money in the long run, and if nothing happens, it's okay.
Right. There's that saying, if nothing happens, it was a good decision.
Right.
Yeah, but I don't know. The mental aspect of, I'm telling you, without a doubt, Carlos, because I know you've handled. We go over all my different insurance, whether it's my rental properties, it's my motorcycles, my dirt bikes, even. I mean, we just went to Houston to go ride, and we all took our bikes in. Well, we could have easily had them all taken. So he takes the van, knowing that we have 13 bikes in the thing, and gone. Right. Everybody else is panicking. I actually wasn't that nervous. I'm like, I have insurance. If they take my bike, I get some money back.
Yeah. Right. And that's the key. I mean, you have to...
And a new bike. You just wanted to leverage yourself into a new bike, Don. I know you.
I left the door open.
Yeah.
But, I think I've talked about this before. A good example is my wife's vehicle in front of our house got stolen.
Oh,
3 days before the lease was up.
Oh, no.
Wow.
So, that being said, imagine if we didn't have the proper coverage.
Oh, yeah.
Now, we have two issues. We don't have a vehicle. Thank God we have rental coverage, so we can go get a vehicle while her vehicle is being found. If they 45 days later they found it. But anyways. And then we still owe money to the leasing company.
Right.
So, it can happen to anybody. So, when you say, nah, it's not going to happen to me, that's when you have to reevaluate and make sure that you have the right coverage.
The right coverage is key too, because a lot of people also watch. This I know for a fact this has happened a lot, especially with all the damage, with all the homes and the fires and floods and all that. A lot of people are under coverage. They did not have enough coverage because they were getting the lowest quote, and now they don't have enough to rebuild.
Right, or they're all of a sudden they find out that their deductible was 1% of the dwelling amount. So if they have $1 million home, what's 1%?
A lot.
100,000.
Yeah, 70
right?
grand.
So, and we see that a lot. We see a lot of that stuff.
But that's a new thing, right? That 1% deductible, that's something that snuck up on people over the last year or two to make policies cheaper?
Yes, but what's happening in the industry, and I'm not going to name any carriers, but there's a couple out there that are not, the agents are not explaining to their insured. Good example, we did a quote for a client. Our premium was $1,300 with a $1,000 deductible. The other agent came in at $900, okay? But when we looked at the policy, it was a 1% deductible. So our $1,000 versus their $10,000, and it was only a $380 difference in premium.
Sure, and I'm sure you had a $10,000 deductible available should that be what they really wanted to shop for.
That is correct. Yeah. But the insured, because they were nice enough to bring me a copy of where they went, and I said, hey, just for my own knowledge. And they go, well, they never told me that. So that's happening a lot out there. And I'm sure it happens in my industry, it happens in your industry. I don't know enough about real estate, but
in our industry,
loans.
It's points.
Exactly. That's another thing,
Yeah, you get this low rate, and did you look at the small print and like, 0.875 in points or whatever? Yeah. Like, the ones you see, advertised in the paper usually have points involved in it to buy down the rate so they look the sexiest on paper, but in reality,
they're done.
They're meant to attract your attention, right? If you're looking at something in print, who even looks at print anymore? But if you were looking at something in print, the idea is just to have something shocking. You look at print, huh?
Well, that's my job. I look at print.
Yeah. It's something shocking, then the phone number. Right? Nobody reads the small print. Something shocking and then the phone number. That's the formula for success.
And I think as a consumer, what you need to do is not only look at the print, but look at there's two parts to any contract. What am I covered for? And what am I excluded for?
Oh, yeah, that part too.
Those are the two most important things that you can possibly do in any type of insurance.
Yeah, you enlightened us on that whole, hey, take a look at your contract and really look it over and see what you're excluded for, because you may not know.
Yeah, we spent
You're thinking, like, my jewelry is all covered and I have a lot of jewelry, and you find out that you're not, or it's a sublimit of $2,500. You're like, holy cow, I have $100,000 in freaking jewelry.
So, out in the market, there's all types of forms for homeowners, whether it's a DP1, a special form, a broad form. They're all kinds, but each one of those has a section, what's covered, and a section of what's excluded. And all policies, for an extra premium, you can probably get rid of some of those exclusions. Not all of them, but as a consumer, I guarantee you most people don't ever read their contract.
Always good advice from Carlos Villalobos with Carlos Villalobos Insurance. This is just take one of take two. We got another segment coming up, and you don't want to go away. So we're going to talk about business owners' policies, because we have, especially in Santa Clarita, so many of you have maybe large business, but also small businesses. Do you realize that there are some key points of why you should look into business owners' policies? When we come back to the Don and Gino Real Estate and Finance Show with Carlos Villalobos with Carlos Villalobos Insurance, we'll be right back.